Stiles here with Revolution Realty Team. We're here with Sam Parker with mycreditguy.com. Just a couple of questions for Sam, just trying to shed a little light on, what makes a good score, or what is a bad score. So Sam, thanks for joining and
Yeah.
take her away, brother.
Yeah, absolutely. Great question, Rob, because there seems to be, you have people that are realistic, and then you have both ends of the spectrum in terms of people that are a little off in terms of what they think their credit score is or isn't. Meaning, we run into a lot of people who say, "Oh my gosh, my credit score is terrible," and then we pull their credit and they're at a 640 or a 660, which that's in the average to coming up on good range, but you can get a lot done with a 640 or 660. They can qualify for a home loan, a good home loan. They can qualify for a lot of financial opportunities. And so in those situations, we usually just say, hey, listen, you're not that bad. There's probably a few tweaks that need to be made to get you up to the good to excellent range or good to very good range, which, basically it goes like this. Less than a 500 is considered, for lack of better terms, as being, really bad. The word that they use that I don't like to because it makes people feel bad is that's been the terrible range. And when you get 500 to like the 580 range, that's very poor. 580 to 620 is going to be considered poor. 620 to 680 is going to be considered average. 680 to 720 is very good. And then 780 plus is going to be considered excellent. And you have, so like I was saying, you have two ends of the spectrum. You have the people that think that their credit's really bad and it's not that bad. And then you have the people that think that their credit's pretty good and it's not good. It's
Well, hey, at least if you're at that lower like 500, there's only one way to go, and it's up. So you're
exactly. Well, and what people don't realize, like they'll say, I'll talk to somebody, they'll be like, well, my credit's pretty good. I've been, I haven't had anything negative for the last 3 years. I have good credit cards. Like I've been doing everything right. And, in some cases they'll say all my stuff's paid off. But what you got to remember is that your credit history goes back 7 years in most cases on most items, sometimes a little bit longer. But so you're not just dealing with what you've been doing lately. You have to be held accountable for the stuff that was 2, 3, 4 years ago in some cases. And so, so then we'll look at those folks and be like, hey, you are doing a great job now, but there's some cleanup work that needs to happen in order to really get you up to the level that you want to be at. So, when you're in that middle range, when you're in that, 620 to 680 range, even sometimes down to like the 600 range, a lot can be tied back to like people's credit card usages. Are they maxed out on their credit cards? Are they over 50%? Are they over 30%? Are they in the ideal range? And some easy tweaks can be made right there to get some extra points. But when you get down in the low 600s, 500s, and especially below the 500, some action is going to need to be taken. You're going to need to go in there, clean some stuff up, probably pay quite a few things off, do some disputes. It's going to take kind of all hands on deck to get those scores up. Now, below the 500 range, when you get into the low 500s and below 500, those are going to be people who are, and this is going to sound weird, but it's like they're actively dropping their scores, meaning you have past due almost everything probably at that point, where you're rolling late pays and it's actively adding lates, adding collection, maxing out credit cards at that point. It's almost like, and again, not to sound like I'm being demeaning to the folks who are in that situation, but it's, you almost have to, I don't want to say try to get them that low, but I mean, it has to be a perfect storm to get your scores, down into that 500 and less range. You got to really be kind of not paying a lot. Or
so what you're telling me is, if that's your situation, you can't really blame the banks for not wanting to lend money. It's like maybe you shouldn't have a car, or maybe you shouldn't actually have a house if you can't be responsible to pay your light bill.
Yeah, it's just that you got to get on track, man. It's like, there's it's credit and getting qualified for money. I kind of try to get people to relate to it as a game, meaning there are rules that you have to play by, and we don't get to decide how we score. We're playing somebody else's game. So if we want money from a bank, if we want money from somebody or some entity, we're playing by their rules. And what they say is, the whole point of a credit report is kind of like a financial resume to see how have you treated other people in the past. Are you? I don't want to be the first one that takes a risk on you. So what have other people done? And if they've taken a risk on you, are you keeping your promises? And if you're not, then I don't want to jump in line to be the next person not get paid. That's how they look at it. It's a risk factor assessment.
I think you look at it and it's like it's pretty simple. Like, but I shouldn't say it's pretty simple because there's a lot of algorithms and things that actually go down into making that. But at the end of the day, it's like, put yourself out there and say, hey, if I'm going to lend somebody money, my own hard-earned money, I want to know if they're going to be able to pay me back. And the banks and any lender or any financial institution just wants to see how likely it is for them to get paid back. And it's like, how many friends do you have that, you would loan money to that you knowingly knew that they weren't going to pay you back? It's like, nobody does that. And then it just becomes a charity gift. And then maybe you're hoping for some good karma points, not credit karma, but just good karma in general.
Yeah, exactly. And that is how I try to simplify it for clients. I say, hey, listen, if you had $500 and your friend was coming to you asking for it, but then you had a list that was 10 people deep of all the mutual friends you had that they still owed money to and hadn't paid them back, and you realize that you were jumping to the end of that line, would you lend them money? And the answer should be no. And then it just kind of makes more sense. Like, oh, well, just because they're a big financial institution with millions of dollars doesn't mean that they, want to give it away. So yeah, it's just, you gotta have your credit in order. And it's one of those things where when people get down to those really low ranges, it's going to take a total assessment. They need to do a budget. They need to see, how much money they're making, how much money they're spending. Because I guarantee when you get down that low in credit, you are spending more money than you're making. And so you need to look at it and look at cutting out, the things that you don't need. And also, just to start to find a way back up to where you need to be. And it's not going to happen overnight. That's what, a lot of them need to understand is it's not going to happen overnight, but that doesn't mean that you should just throw in the towel and kind of continue the way that you're going either.
Well, I just wrote it on our chalkboard here at the office, like that we have down. And it's like, I think you have to think about it. It's like we all are like, hey, I want this right now. I want this now. But it's like, do something today that your future self is going to thank you for tomorrow. Otherwise, you end up just living day to day and there's no game plan, there's no goal. And hey, there's nothing wrong with that. But if you truly want some of these things, in the future, then you have to figure it out. Otherwise, you're just going to, have that like loop pattern of never, getting anything. And what is it? The definition of insanity is like continuing the same action over and over and looking for a different result. It's like, that's no different. So maybe it's either an impulsive thing and you can't discipline yourself, or, maybe your IQ is just not that high, and that's okay too.
Yeah, it's just it's like clients that are in that situation. They're in a cycle, and they're just taking left turn after left turn. I'm not going to pay this bill. I'm going to max this credit card out. I'm not going to pay this bill. I'm going to take on more than I can afford. I'm going to work less hours, something like that. And sooner or later, if you want something better, you got to make a right turn and get out of that circle that you're doing. And a right turn is going to be, deciding to not go out weekend and to save that money and to put it towards your credit card, or that you don't need a new car right now. You can make do with the one that you have so that you can save up some money, or that, that you're going to get a part-time job so that you can, get yourself. So sooner or later, yeah, these folks just have to make a decision and then move towards it with, even if it's just small steps and you're moving towards it, at least you're moving towards it. Because credit, the one thing about credit is it's never stagnant. It's either going up or it's going down, but it's not going to just sit there and be the same. So you're either making actions to improve yourself or you're making actions to hurt yourself.
Yep. No, I completely agree. Life is a teeter-totter. It's like if you have to have some balance, and if you're doing one thing and one kind of action, well, then the teeter-totter is going to be, on that one side, and just the opposite, it's going to be on the other side. So you probably want kind of a balance, in the middle, even distribution. So, no, that's awesome, man. Well, good. I think that's about all the time we got. But
cool.
If anybody has any other questions, again, you can check out Sam at Sam at mycreditguy.com for the email, and again, just mycreditguy.com for him, and we'd be more than happy to help you out. There's a lot of great people out there that are willing to talk about this stuff around us. And it's like, just got to ask the question. So that's why we're kind of trying to throw these things out to everybody and just let you know, hey, there's a lot of resources out there, and it doesn't have to be scary. We all make mistakes, and life is what it is. Like, the important thing is changing your mentality today to give you the situation tomorrow that you might like better. So awesome.
Absolutely.
All right,
cool,
brother.
Man. Well, thanks a lot, Rob. I appreciate it.
Absolutely, man. Thank you. All right.